students? So we are still waiting for a few, right?
I think Hashan and them aren't here yet. I think so. Yeah. Do you want to wait for them or?
I'll wait till 10:05 and then we'll start.
Okay.
Guys, so today we are going to talk about project financial management, cost management, in other words. So we've covered scope management, schedule management. We did a session on risk management. Last week we did stakeholder management. So another very important, practice area for a project manager is cost management or financial management. So today we'll be covering project financial management, and we will be focusing on quality management next week. Okay. So what do you think is cost management? What is project cost management? What do you think? As a project manager, what activities would you do as part of cost management? What is the main focus in your cost management practice area? Sachira? I want you guys also to participate. What do you think is cost management? Let's have a discussion and then we'll move forward.
Vasandu, cost of quality is also an area.
Cost of quality, yes, it's an area, but cost of quality we discuss when it comes to quality management. So in quality management, we talk about cost of quality to emphasize, or rather to understand the impact a product or a project would have on bad quality. So in terms of cost management, I'm not really focusing on cost of quality, but okay, let's take a very basic example. Let's say you are building a house. Okay, so obviously cost would be a major concern for a person who's building a house, and without knowing, you are actually playing a role of a project manager. You're coordinating with multiple vendors, you are allocating budgets, you have a communication plan, you speak to your spouse, you speak to the architect, you speak to the head boss and all that. So you have you maintain a relationship with your vendors, the workers and all that. So in a way, you are playing a project management role, even if you're building a house for your own personal use. So when you're building a house, what would you do, in terms of cost management?
We do estimations.
Yeah, good one. You do estimations. So that's the first step, right? You do estimates, and once you have estimate, what would you do next?
Allocate funds.
Sorry, Sachini?
Allocate funds.
Allocate funds, yes. So now there is a slight difference between an estimate and a budget. Can someone tell me what's the difference between an estimate and budget? Sachin, you are right. You would allocate funds. You would allocate funds based on the budget, right? So what is the difference between an estimation and a budget? Sudesh? Dimitri?
budget is the finances you have for the project. Estimate is how much will actually cost.
Okay. Yes. So, so yes, you're right, Dimitri. Now, when you estimate something, you might end up in a figure that you might not be able to afford. That's an estimation, right? So budget is what you can afford out of that estimation, what you can afford. So maybe it might be that your estimation came up to 40 million to build a house, but your budget might be 30 million. So you would have to uh, like either reduce the scope or have a phase-wise approach. So you can do different things to fit into that budget. So main difference between an estimation and a budget, as Dimitri said, budget is what you can afford or what you can allocate to that project, whereas estimation is the amount of money that is forecasted to spend on the initially identified, or rather the ideal scope that you had planned, right? So second step, as Sachin said, you would have to allocate funds or rather allocate budgets. After that, what would you do as part of cost management when you're building the house? So you done your estimation, you allocated funds, allocated budget. What else would you do? Shashi? Yanushka, sure, go on.
Maybe try not to go beyond your budget.
Yes, you would try not to go beyond your budget. So you would enforce some controlling mechanisms, right? In project management, we would call it as controlling. So I think you touched upon three areas when it comes to cost management. One is estimation, allocating funds or budgeting, and then Yanushka said controlling costs. But before that, we have planning. Okay, so that's the only missing item that you guys could not really say. But other than that, you explained pretty much that all the activities in cost management. And have you noticed when it comes to any project, you are more concerned about the money you spend or how much project costs in relation to the potential earning power of that project. So in that aspect, cost management is very important, because for any project today, you would have a very strict budget guideline, and you would really focus not to exceed that budget. So because of that, cost management process area is one of the most important process areas for a project manager, right? So before we go on to these four areas that we discussed, I would like to talk about different types of costs associated with projects. Do you guys have any idea what could be those costs? I'll make it easy for you. Okay. So when it comes to different types of costs, you have direct costs, you have indirect costs, you have recurring and non-recurring costs, you have fixed and variable costs, you have normal costs and expedited costs, and you have sunk costs. So these are the main, the variations or different types of costs associated with the project, right? So what do you think is a direct cost? Let's take some time to go through these different costs before we move on to the process areas. So what do you think is a direct cost? Sachira, what do you think is the direct cost? Sachira, are you here? Ashane, what is the direct cost? What do you think is the direct cost?
Like something that has to necessarily be spent on, maybe like people, like to pay the people or something like buy
Exactly.
products.
Yeah. So any expense that is directly billed to the project is a direct cost. As you rightly said, the labor, the amount of money you spent on labor, it's a direct cost. If you purchase equipment or material for the project, that's a direct cost. If you use certain facilities, if you use a lease for a premises, that's a direct cost. If you have a certain amount of headcount, that's a direct cost, because you have to provide them wages, you have to provide them with like workstations, electricity, water, all that would add into these employees. So those are direct costs. If you consume any service for the project, maybe you need to do some height work in your project, so you need to get a boom truck. So that becomes a direct cost, right? So all of these are direct costs. Any cost or any expense that is directly billed to the project is a direct cost. Okay. So in the same way, what is an indirect cost? Now that we know what's a direct cost, what is an indirect cost?
Like the administration expenses?
Yes, administration expenses. Why do you think it's a indirect cost though?
It is not directly involved with the project, so it's
Exactly.
anyway the cost is involved. If you could take the total, it will be calculated.
Exactly. So any expense that is not directly identifiable for the project is considered an indirect cost. So like there are certain activities where you can't really put a cost as such, but there is an expense from the project. Like you rightly said, administrative expenses. When you talk about manufacturing, now in order to manufacture, you need certain, you need electricity for the machine to operate. You need raw material for that to operate, right? So those can be your direct costs. But indirectly, you need to service that machine time to time in order to make it functional. So that becomes an indirect expense, right? Then you have your fringe benefits, like you would have variable pays based on amount of sales you're bringing in, things like that. So it also becomes an indirect cost. If you are paying someone for insurance, that's not directly paid for the employee, but it becomes an indirect cost for the organization, right? Clear? Any questions?
Pasindu,
Yes.
are taxes considered indirect costs?
Taxes, yes, can be considered indirect cost based on the scenario, right? So now, for an example, at my organization, we have two ways of purchasing. With certain vendors, we have SWAT invoices where we don't really pay the tax. So in that case, it becomes an indirect cost because even though we pay only for the goods or service we purchase, tax is paid separately in a different way. So that becomes indirect cost in that way. But there are also certain vendors who are not SWAT registered with our organization. For them, if we are purchasing a hardware, like let's say a server, we would pay with the VAT. So that becomes a direct cost. Does that answer your question, Dimitri?
Yeah, understood. So it depends on the circumstance. Got it. Thanks.
Exactly. Yeah. And also now, when you look at these different costs, I mean, sometimes a direct cost can be a recurring cost as well, and also it can be a variable cost as well. So certain costs you can put into more than one category. So you can't really say a direct cost would not become a recurring cost. You can't say that, but obviously a direct cost would not become an indirect cost because they're opposites. But it depends on the context, as I said. So second types of cost is recurring and non-recurring, right? So as the name suggests, recurring costs are costs that are incurred throughout the project life cycle. So for example, monthly salaries you would pay, it's a recurring cost. Monthly electricity bill, it's a recurring cost. If you are building a house, the material costs that you would have to bring in until the project is over, that's a recurring cost, right? What are the non-recurring costs? There are certain projects where you have to incur like one-time payments. Like for example, before you go to a project, you might do a market research. Or when you're handing over a project, you might do a training on this new software or new system. That's a one-off, right? So that becomes a non-recurring costs. Then you have your fixed costs and variable costs. What are the fixed costs? Hashan, what is a fixed cost?
For example, a monthly rental.
For example, monthly rental, yes. So any cost that would remain constant across the project timeline, it's a fixed cost. So if you look at the monthly rental, be it salary, be it tax, those are fixed costs, right? But also now, Dimitri, like I spoke about the tax in your case earlier, salary can also become a variable cost, right? So for an instance, now in my organization, when we do the budgeting, we do the budgeting on USD. So for everyone, we have a dollar salary amount. But when we actually pay in Sri Lanka, we pay in local currency, LKR. So let's say we allocate $1,000 at the beginning of the year as the salary, but when you pay, it's not really $1,000. It might be slightly less, slightly more, right? So it becomes variable in that way. But if you really look at a USD cost center, that becomes a fixed cost. So again, based on the context, it can change slightly, but generally we consider salary, tax, depreciation, insurance cost as fixed costs. On the other hand, what are the variable costs? Can someone give me an example? Sachini?
And for machines we are using for the project.
Sorry?
rent for machines we are using for the project? Something
Yes.
rent, like
Yeah.
it depends.
Again, yes, it depends. Like you said, it could depend, but yes, it can be considered as a variable cost. But if you do your project management thoroughly, and if you really allocate, you need a certain machinery for 10 hours, that's it. And you, if you can fix it, it becomes fixed. But generally, the expenses that are related to equipment, be it rental, be it maintenance, are variable costs. Certain organizations give bonuses, like, based on your performance, that becomes a variable cost. Like sales oriented companies give the sales commissions. Again, that becomes a variable cost. If you do more sales, commission is higher. If you do less, it's low. So likewise, it becomes variable. Freight, again, based on the weight of the consignment, it becomes variable. So any cost that would vary across the timeline um, can be considered as a variable cost. Okay, so now I have been working for IT organizations throughout. Sometimes as part of the project, we have to travel. So the traveling costs, they are variable. Sometimes, like, based on the airline, based on the transit, based on the time of the year, that the cost varies, right? So all of these are variable costs. Is it clear, guys? Okay. Silent is golden. Okay, moving on. Normal and expedited costs. Can someone tell me what is the difference between a normal cost and expedited cost? Yanushka, what do you think is the difference between a normal cost and an expedited cost? Shehan, are you?
Yes, Prasid, if you want to complete the project before the end date, so you have to expedite the process now. So
Yeah,
you can spend more money and expedite the process.
exactly. So a normal cost are general costs that are forecasted and that would incur within the project timeline. So your labor charges, the material costs, the building rentals, all that are your normal costs that you have forecasted, that you are expecting to incur. Now, let's say that you have to finish the project 2 months earlier than what you have planned. So then you would have to expedite the project. So in order to expedite the project, in order to finish the project sooner, what would you have to do? Maybe you would have to add more resources. Maybe you would have to hire more equipment, right? So in order to crash the project, or in order to expedite the project, you would have to incur certain costs. So these are called expedited costs or crash costs. So if you look at overtime, that's a expedited costs. If you add more labor, extra labor charges, that becomes your expedited cost. If you hire another boom lift, hire another piece of equipment to enable work to be finished faster with the intention of expediting the project timeline, that becomes a crash cost or an expedited cost, right? So today we are building this warehouse in my organization, right? I'm responsible for part of that project, and we have a dependency on the floor concrete, right? So we want to finish our activity before the concrete is done. Our activity is mainly involves height work. So we agreed that we would add another boom lift in order to expedite the project. So that becomes an expedited cost for our project, right? So that's the difference between a normal and expedited costs. Only other type of costs that we did not speak yet is sunk cost. What is a sunk cost? Can someone tell me what a sunk cost is? Shashi, what do you think is a sunk cost?
Cost, I would say, which is already been made and which cannot be recovered by any mean.
Yes, exactly. So sometimes for projects, we make certain costs, which is already expended, right? Expensed out. And now you come to a situation where you are deciding, should I continue this project or not? In such a case, what you expense earlier should be ignored. So these costs, which you're going to ignore as expended, in deciding whether you're going to invest more in the future or not, is your sunk cost. Is it clear? Do you need more clarification there?
An example, please, Master?
So let's take an example, right? Let's say you are building you are building a house, okay? So now halfway through the project, you realize that you don't have enough money, or you can spend your money elsewhere. You can invest your money elsewhere. And you are deciding whether to continue this project or not. So let's say you've done about 500,000 rupees of investment in the building work. So you've done the piling of the land. Now you are deciding whether should I really build a house here or should I build a commercial property. Okay. Now, based on the next activity, if you are doing a commercial property, you might have to incur more cost. If you're doing a house, you would have to do certain other changes likewise, right? So when you're making that decision, when you're making how much you need to invest in the future and what is the return that you would have, like for example, now you did that project thinking you are going to build a house, but halfway through you stopped it, you're deciding to build a commercial property where you would get revenue from rent. So like multi-story building. Now, in that case, if you are building that new commercial property, you would have to ignore the money you spent already in developing that property, because that was done with a different goal in your mind, right? So that's a cost that you're not going to recover, which is already expensed out. So that's a sunk cost. If you're going to move to an apartment or move to a commercial property, you would have to do something from scratch. So you need to forget that 500,000 spent on that piling work. Is it clear?
Yes.
All right. Okay. So generally, a sunk cost is something you've already incurred, and when you are doing your investment, you need to ignore that. You can't consider that a part, that investment as part of the project. So that whatever you ignore becomes a sunk cost. Moving on. Cost classifications, right? So as I said at the beginning, cost can fall onto multiple categories which we discussed. Now, if you look at direct cost, like direct labor, right? It is a direct cost for the organization, direct cost for the project. Labor is also a recurring cost, right? It is also fixed. You have an hourly rate, right? It's also a normal cost, right? So it can fall onto multiple categories. It's a direct cost, it's recurring, it's fixed, and it's a normal cost in the project life cycle. When you take a building lease, right, that becomes again, depending on the situation, it may become a direct cost, may become an indirect cost. Can someone tell me about a situation where a building lease becomes an indirect cost? Okay, can someone tell me where a building lease becomes a direct cost? Sudesh?
Pasindu, actually from the day that you start the project, the lease should be paid, is it?
Okay, when would it become a direct cost? When would it become an indirect cost? So I'll give an example. Let's say you are into warehouse operations. So you are renting a warehouse premises on a lease. You are renting it out pretty much. So that building lease becomes a direct cost for your operation, right? So in that respect, it becomes a direct cost. Let's take another scenario. Let's say you are a building contractor. Okay. So as part of building contract, as a building contractor, you have workers under you. Now they would come from, like, faraway places. Let's say you're doing a project. In order to facilitate, in order to run that project, you would have to rent a place where you can accommodate your workers. So in that way, that building lease becomes an indirect cost for you. Does that make sense?
Yes, Pasindu.
Yeah. So it's recurring, in the sense every month you would have to pay. It's fixed because it doesn't change month over month, and it's a normal cost, right? Expedite costs. In order to expedite a project, you hire an additional boom lift, let's say. It's directly involved with the project. It becomes a direct cost. It's not recurring because, it's just for that particular period. Again, depending on the situation, it can be fixed and it can be variable. But because you are hiring that equipment to expedite the project, it becomes an expedited cost. Material that you are getting to build a house, so to support the project becomes a direct cost. It's recurring. It would vary. I mean, sand price would vary time to time. Petrol prices would vary time to time. Likewise, again, with regard to the material, it might be fixed or variable, and it's a normal cost. So as you see, each cost can be classified into more than one type of costs. And also it would vary depending on the context you take. So we talk about building lease becomes direct and indirect. We talked about expedition costs become recurring and non-recurring. We spoke about material being fixed and variable. So depending on the situation, it can vary as well. Now that we have a clear understanding of different costs and types of costs, let's move on to the cost management process areas. So as we discussed at the beginning of the lecture, right? Cost management process area consists of 4 sub-processes. First step of cost management is your planning. Right? You have to have a plan to manage your costs. When it comes to planning, you would discuss how much time you're going to spend on estimates, what kind of estimation techniques you're going to use, who would be involved in the discussions, to whom you're going to report, how you're going to report, what kind of controls you're going to put in place, all that, how you're going to monitor, how frequent you're going to monitor, the different tools and techniques you're going to use in this, the whole process, all that becomes a part of your plan. So this is the first step. Once you have a plan, once you know which tools you're going to use, which estimation technique you're going to use, with whom you're going to estimate, how often you're going to monitor, all that, then you can move on to your second step, which is cost estimation. At this stage, you would know your scope. You would have a good understanding of your timeline. Based on your scope and your time, the third variable, the third element of the triple constraint is your cost, right? You have time, scope, and cost, okay? So based on your timeline and scope, you can do an estimation. So when it comes to estimations, there are multiple techniques in which you can estimate. We will talk about them. So this is the second process area. Now, as we discussed earlier, when you estimate, you might have a certain amount of a dollar figure for that project. Maybe it's something you can commit, maybe it's something you can't commit. So based on your capabilities, you would have to determine a budget. So that's the third step. Okay. First you do the estimate, initially you do the planning, then you move on to your estimations. After that, you allocate funds, so you determine a budget. It doesn't stop there. Once you allocate the funds, you would have to constantly monitor work being done versus expenses to ensure that you are running the project in a cost-effective fashion. So you have to enforce cost controls. So that's your fourth step. You plan, then you estimate, then you commit, and once you commit, you start controlling it so that you don't go over the budget. I hope it's clear. Let's move on. Guys, please feel free to stop me at any time if you want to, like, discuss any of these at length. We can have a small discussion at any time, no problem. So as we discussed, the first step is planning cost management. So planning cost management focuses on creating a cost management plan. So it's a document which basically describes how you're going to estimate your costs, how you're going to budget it, how you're going to manage your costs, what kind of monitoring and controlling techniques you're going to use throughout the project. So when it comes to tools and techniques which we use in plan cost management, WBS becomes our go-to tool because that has all the tasks broken down into granular details. Sometimes you rely on historical data of similar projects which you have done in the past to identify related costs. And also there are these bodies which publish standardized rates that also can become an input or a tool which you're going to use in your planning cost management sub-process. So basically what it does is it gives you an overall idea or overall guideline as to how you're going to manage your project with regard to time, with regard to cost. So your baseline, your techniques, your stakeholders who would be involved, your monitoring and controlling techniques, all would be documented as part of your cost management sub-process. So generally at the end of this process, you get a document called cost management plan, which highlights all these items which we discussed. Okay. So once you have the plan, you can follow up with the next steps of your cost management activities. So second step is estimating costs, right?
Vasindu,
yes.
What is the third one that you mentioned?
Third one I mentioned.
Previous slide.
Here.
The rough outline of the number of resources.
Okay. So now when you do your cost management plan, right? When you say, okay, this is what I'm going to spend, this is how I'm going to spend, that would also give you a rough guideline as to what are the resources you're going to use, how many resources you would use, what's the timeline, all that, right? Like as I said initially, your cost is a part of your triple constraints, right? So you have your time, scope, and cost. Now, based on your budget, based on what you're going to spend on the project, you might have to either increase the workload or reduce the workload, reduce the employees or increase the employees. So that at this stage, because you have already know your timeline, your scope, at this stage, when you do the cost management, you would have a good understanding of what kind of timeline you're going to expect, what kind of scope you're going to deliver. Based on that, you would know how many resources you need, right? Because now, let's take a small example. If you're going to build a house in 6 months, you would have to have certain amount of workers in that house. But if you're going to expedite it and deliver it in 4 months, you would have to add more resources into it. So when you know your timeline and your scope, you would also have a rough outline as to number of resources you need to deliver that project. So that also becomes an input for your cost management. So based on the number of resources, you would have to increase the wages and all that. Does that answer or clarify your question, Akshay?
Yes, that's perfect. Thank you.
All right. So moving on to estimations, right? So as we discussed at the beginning of this lesson, there are multiple methods which you can use for estimation. You basically, based on your WBS, you can come up with an estimation. Estimation is a forecast that you predict that you might spend in order to accomplish the project goals. Time to time in the project life cycle, you might revisit your estimations to see that you have done a good job, or that that you are in line with your expenses. So mainly what we need to focus here is on the different estimation techniques, right? So when it comes to estimation techniques, you have expert judgment. What is expert judgment? You go to someone who knows in and out about this type of work or the domain, and you get an expert opinion on the costs involved. So that's an expert judgment. Then you have your analogous estimates, which is basically it actually comes from analogy, right? So you look at a similar project done in the past, and then based on that, you you forecast something in relation to that project. So for an instance, let's say you are building a house, you're building a 2-story house. So when you're building that house, you would say, okay, 5 months ago, I built a house which was 3-story, but rooftop was pretty much like, not that like, large or not that expensive. So this 2-story house would also consume a similar amount of money, and then based on that, you would give an estimate. So this is generally fast and also accurate to a great deal. Third type of estimate is parametric estimates, right? What is a parametric estimate? I think we spoke about this earlier also at one point. Can someone tell me what's a parametric estimate? Sachira, what do you think is a parametric estimate? Yanishka, sorry.
I'm not too sure. I think you have like a set value and then you multiply that by whatever the amount of work done.
Yeah, somewhat there. So basically, parametric estimates are parameters, right? Like when we talk about square foot rate, like you said, you have a fixed amount for a certain calculation, and based on the quantity you use, you would multiply it and come up with the full estimate. So it's a parameterized estimate. So square foot rate. Now, if you are laying tiles, you have per tile cost, per meter cost. Likewise, you have parameterized costs. So these are parametric estimates. Then another estimate is your 3-point estimate. 3-point estimate is basically looking at your optimistic case, the best case, your most likely case, average case, and your worst case, pessimistic case estimate. Okay, and then you divide this by 3. So you land somewhere in between optimistic and your pessimistic estimate, right? So you considered your best case scenario, your most likely scenario, and the worst case scenario, and you take average. So that's a 3-point estimate. Also, there is a weighted 3-point average. So basically, on the weighted 3-point average, what you do is you give prominence to the most likely case, and you divide this by 6. Okay, so you have more weightage given to the most likely case. Then finally, you have bottom-up estimates. Bottom-up estimates are generally very accurate, but very time-consuming, because in order to do a bottom-up estimate, you need to understand all the granular tasks that are involved in a particular activity, in a particular project. And then based on those granular tasks, you would cost each activity, and then you would sum it up or collate them. So that's a bottom-up estimate. It's very accurate, but time-consuming. Based on the estimate, based on the type of estimation technique you use, you would have an estimate range. So we talk about 3 main estimation ranges: order of magnitude, budgetary, and definitive, right? Order of magnitude estimates are top-down estimates. You would look at the project and you would say, okay, this should probably cost about this much. It's not very accurate, but it's very fast. Its order of magnitude estimates are given at the beginning of the project to understand whether you have budget to do the project without spending more time on that work. So it can go up to, it has a variation from -25 to +75%. Not accurate, so as you can see. Then when there's commitment, when you see there's interest to start the project, you do a budgetary estimate, right? Budgetary estimates are generally more accurate. These budgetary estimates are used to establish the funds required to start the project. So they vary from anywhere from -10% to +25%. But then sometimes, depending on the criticality of the project, you might need to do a definitive estimate or a bottom-up estimate. Like we discussed earlier, bottom-up estimates are very accurate. They would range anywhere from -5% to +10%. So as has a narrower range because they are more accurate. Guys, I think we spoke about group decision-making techniques earlier. Do you want me to cover this, or are we good with this? So group decision-making techniques are basically techniques which we use in order to come to a conclusion or come to a decision when multiple parties have difference in opinion, right? You have dictatorship, unanimity, majority, and plurality. Dictatorship is when there is no consensus on one way forward. One person with authority takes over and ask everyone to follow a certain path. So that's the dictatorship. Unanimity is where you want everyone to agree to the decision taken. So like sometimes when it comes to very crucial personal decisions, which might impact a personal situation of a person, you take a unanimous decision where you want everyone to agree. Majority is where more than 50% agree to the decision, and plurality is where the largest group supports the decision. For example, if you have 5 people wanting to paint a classroom in blue, 3 people wanting to paint it in white, 4 people wanting to paint it in pink. So 3 plus 4 is 7. 7 is larger than the 5, but still, because you have most of the people or plurality, the highest group saying voting for blue, you would paint the class in blue. So that's plurality. So now we covered estimation techniques and estimations in general. So now we go to our third sub-process, which is determining budget. So determining budget is pretty much looking at the estimate and looking at what you have in your hand, and based on that, you committing on a certain amount of fund for the project. So budget, when you determine the budget, you would draw a cost baseline. So this is the most important part when it comes to determining budget. You authorize or you allocate funds to the project, and that funds becomes your cost baseline. So as a project manager, you are allowed to spend that much money on that project. So budget would let you come up with the cost baseline. So when it comes to budgeting, also you have multiple techniques. You have top-down budgeting, you have bottom-up budgeting, you have negotiated budgeting, and you have activity-based costing budgeting. Can someone tell me what's the top-down budgeting? Hashan, what do you think is the top-down budgeting? So sometimes when you are bidding for a project, right? It happens like, you know, in some of my previous organizations, like for example, when I was working for Virtusa, I get a project and I was told to deliver that project in a certain amount of dollar figure. So that's a top-down budgeting technique where top management or the senior management decides on the overall budget for the project, and that budget is flown down to the granular tasks and ask the project manager to deliver the project in that budget. So it's a top-down strategy. What is the advantage of a top-down budgeting strategy? Basically, management has more control over the budget because they establish the budget, top management. When it comes to disadvantages, it's difficult to get the buy-in from the people or from the project manager because he is not part of that budgeting cycle, right? So this might lead to competition. For example, certain organizations would say, okay, now next year my budget is $100 million. Senior management would decide this is my budget for infrastructure development. Now, under infrastructure development, you would have certain departments, 4 or 5 departments. So all these 4 or 5 departments would compete for that 100 million to get a better chunk, to get a bigger chunk of that budget. So that's another disadvantage. Now you know about top down, what's a bottom up budgeting technique? What is bottom up? Isul, what do you think is a bottom up budgeting? Like, you know, how do you do the bottom up budgeting? In top down, top management decides the budget, right? In bottom up, you ask the granular or the lower level organization to give the estimations for the activities they need to do, or give the costing, give the budgeting for the activities they need to do. So these granular activities budgets get summed up at the top, and you would collate everything into your final budget. So this is a bottom-up budgeting technique. What's the advantage? You have greater buy-in from these lower level managers. And because people who are more closer to the work are involved in the budgeting, this becomes more accurate, and you may catch unusual expenses that you might not really see as a top manager. The major disadvantage of bottom-up estimations is that all these managers would put buffers, their own buffers. So because of that, they might actually be larger than, they might actually arrive at a larger figure than what is really required. And because of this concept, because of this mindset also, there's a lot of cost cutting from senior management when it comes to a bottom-up estimate, which sometimes would lead to an unrealistic estimate as well, unrealistic budget as well. Now you know top-down and bottom-up. What's a negotiated budgeting? So negotiated budgeting is basically you do your top-down, you do your bottoms-up, and then whatever the difference you have, right? Whatever the difference you have, you negotiate. Why is the difference? What activities you are doing, which I don't know. And then you come to a consensus with both these techniques. When it comes to advantages of negotiated budgeting, you have more buy-in, you have everyone's approval, you have everyone's alignment to the budget. That's the highest, that's the greatest like plus point when it comes to negotiated budgeting. The main drawback is that two parties would have to spend time and energy on coming up with estimates, and it's time consuming with the negotiations, right? Finally is activity-based costing. So here, this is also known as ABC, activity-based costing. Here what you would do is pretty much you would understand all the activities that you would have to consume in order to do the project, and then you realize each activity would consume resources, and these resources would consume budget, right? So based on that, you would come up with a budget. So that's your activity-based costing. Any questions up until now? So we've done your planning cost management, your estimation techniques, and your budget. Any questions? Guys? Yanushka, Dimitri, Hashan, all clear?
Yes, sir.
Yeah.
All good, Pasindu. Thank you.
All right, okay, good. Moving on. So we spoke about all the three areas. Last one, which is left, is control costs, right? So when it comes to controlling costs, now when you come to this stage, you know your cost management plan, which talks about the estimation techniques, monitoring techniques that you need to use, the currencies you would use in the project and all that. And you have done your estimations. After the estimations, you've done a budget allocation. You come up with a baseline budget. Now you need to control the cost in order to make sure that that you are not going over the budget, right? So control costs would look at your cost baseline or the budget baseline, and it would monitor the running cost of the project. And based on that, you would take corrective actions in order to align the budget to the baseline. So that's control costs in a nutshell. Mainly with regard to control costs, we focus more on reducing costs. So you would look at how you can get the maximum from the resources available in order to get things done more effectively as part of cost cutting. You might reduce certain expenses that you planned on recreational activities for the project team in order to deliver the project within that budget, agreed budget. Or you might, in the start of the project, if you let your consultants fly in business class, you would ask them to fly in economy class because you are over budget. So likewise, you might set up different cost control mechanisms as part of your control cost sub-process. There are a few key terms that I would like you to know when it comes to cost control. One is law of diminishing return. Right? What does law of diminishing return mean? Law of diminishing return tells that sometimes you would put more resources, more money into something, but what you would get would decrease. A good example is just because you double the resources, you might not be able to deliver it in half the time, right? So that's law of diminishing return. More you put, less you get compared to what you put. Working capital is basically the amount of money a company must invest in order to ensure the day-to-day company operations. That's your working capital. Then you have funding limit reconciliation, right? What is funding limit reconciliation? It is the process of comparing the planned expenses in a certain timeline with regard to the money available to spend in that period. So generally, you do the reconciliation based on quarters. So you have a yearly budget, but then you have a quarterly reconciliation just to ensure that you don't spend your entire year's budget in the first quarter itself. So you reconciliate. Then another key term that you need to know is depreciation. When you purchase certain assets to the organization or to the project, over time the value decreases because you're using them because the warranty expires, they become second-hand equipment. Due to all this, the value depreciate. So that is known as depreciation. Then we'll also spend little bit of time on earned value technique. So here I want you to focus on three main areas only with regard to earned value techniques. There are more, which what I would do, maybe I can upload a document with all the earned value estimates or earned value formulas to the Moodle. I think that's a good idea. I'll do that. But for this lecture, we focus on your cost variance. Cost variance is basically to understand whether you are under budget or over budget. So how do you calculate your cost variance? Cost variance is your earned value minus actual cost. Earned value is the value you earned by spending certain amount of money, and actual cost is the actual expense that you spend on the project, right? So the variance is your cost variance. If it's positive, that means you are under budget. If it's negative, that means you are over budget. Okay, if you're over budget, you need to do certain activities to bring it down so that you become within your cost baseline. Then you have your cost performance index, which is earned value over actual cost. This is to understand with regard to timeline how efficiently you are using your resources, right? If you have a positive, if you have a value which is more than 1, which reflects your using resources efficiently. If your value is less than 1, then that means you're not using your resources efficiently. Finally, you have schedule variance, which is with regard to the timeline. We ahead of schedule or behind schedule. Similarly, similar to cost variance, what you do is you take the difference between earned value and planned value in order to understand the schedule variance. So that's what I plan to cover today. Any questions on what we discussed so far?
Vasindu,
Yes.
what is earned value like? Can you give us an example?
Okay, I'll tell you. Now, let's take this as a project timeline. Okay. Now, let's say you're building a house, okay? When you're building the house, you would say, okay, if my concrete is just, because this is a hypothetical example, I'll take small numbers, $100. At a given point, let's say you completed your concrete. Okay. If you completed your concrete, what's your earned value on that concrete? $100, right? Ashay?
Yes, yes.
Yes. Now, in order to complete the concrete, how much money you had to spend? You had to get 2 laborers to lay the concrete for 2 days. Let's say each labor was $10, for 2 days, $20, $40. And you, for material, you had to spend another $50. Okay. So your cost variance is earned value, which is now you have a finished product, finished flow, which you values at $100 minus the amount of money you spent on it, 40 plus 50, 90.
Okay.
So you have a positive cost variance, $10. That means you earned more than what you spent, which is a good thing. You are under budget.
So the $100 is the estimate, sort of.
Yeah, it
Or-
can. Yeah, it can be an estimate, or generally it's estimate. Most of the time it's an estimate. You would say, okay, I mean, I don't know. Have you built a house? When you are building a house, you would think, up until finishing, you would think you are having a positive cost variance. You would say, okay, I budgeted 30 million rupees to build a house. My house is, the structure is almost done. I've spent only about 10 million rupees, right? So I don't know, can anyone relate to this? But generally, when you're building a house, you would think like that. You would think, okay, probably I've estimated more, that I would probably have more money saved by the end of the project. I might even buy a car. You might think like that. Where with regard to that, your earned value is higher compared to your actual cost. So you have a positive cost variance. But when you do your finishing activities, you would realize, no, money is going like water almost. How much money you spend on the project, it's not enough. You would have to do the light fittings, you would have to do the toilet fittings, the bathroom fittings, the paint, the tiles, all that would cost you a fortune, right? So then sometimes your earned value might actually go down and your actual cost might go up as well. So earned value it's generally an estimate. It's okay. It's an estimate. So you look at what you gain versus what you spend, and based on that you take decisions. Does that answer your question, Ashin?
Yes, thank you.
All right, good. Does anyone else have any questions? Shashi, Sudesh, Sachini, Yanishka.
So if earned value is sort of like a estimate, what is planned value then? On the schedule variance?
So planned value is again, how do you plan for a project? You plan on granular activities, right? You would say, okay, again, planned value is also an estimate, but earned value more like it's a different kind of estimate, in the sense that you have a complete product. You have actual value, right? Okay, building a house might be a bad example for this, right? Let's take a software development, right? In software development, in your timeline, you would have a plan saying, okay, on the first month I'm going to spend $100. Second month I'm going to spend $200. Third month I'm going to spend $500. Likewise. So this is your planned value. So main difference between earned value and planned value is, planned value is with regard to timeline. So you say, okay, it's like reconciliation, Yanishka. You say, in my first quarter, this is my budget. It's again an estimate, but with regard to timeline. Earned value, on the other hand, an estimate on what is completed. So this is completed. This is the value I foresee in this. or like, it can be a minimum viable product which you can really release to market even, which would have an actual value earned from that product. So probably I'd explain it a little bit in detail when it comes to agile project management. But for this stage, Yanishka, maybe it's enough for you to think planned value is an estimate with regard to your timeline, where how you're going to spend your money, how the plan in which how you're going to spend the money. First month this much, second month this much, this month this much, third month Y amount. Likewise, earned value on the other hand, estimation of value on the completed work. So planned value is used mainly with regard to your schedule variance. Earned value is used with regard to your cost variance. Is it clear, or did I make it more complicated for you, Yanushka?
No, it's clear, Vasandu.
All right. Any other questions, guys? All right. If we don't have any other questions, what I want you to do is I want you to create a project charter for your group activity in your groups. So we will be putting you into breakout rooms, and I will visit your breakout rooms as well to get your charter going for the group activity. So I think, Yanishka, you wanted to do a Bruno Mars concert. Dimitri wanted to do a private property construction. Ashane wanted to do airport construction. The other group also wanted to do airport construction. So let's scope it out. Let's do a charter together. So that's the activity which I want you to spend your next 1 hour on. So with that, we'll put you into breakout rooms, and then I'll visit you guys to fine tune the scope and get the scope right. Is that all right with everyone?
Yes.
Yeah, Vasandu.
Okay. So if you have any questions with regard to your assignment also, I can help you in the breakout rooms. Okay. Cool. Jeremy or Hiru, can
Hi,
we?
Vasu. Give me a second. I didn't prepare them earlier.
Sure.
Group
Sure.
A, who are the students? Okay, wait. I have
It's Hashan, Ranidu, Rajita, etc.
Okay. So Hashan and Isurana.
Yeah.
Okay. Group B.
Okay, Yanishka, why don't you tell us the group members of your group, so Jeremy can put them into the group.
Yeah, Jeremy, it's myself, Sachini W. I think it's just the 2 of us today.
Oh dear. What to do?
Yeah.
Okay,
Sachini
Dimitri.
W. Okay. Dimitri is group D, no?
Yes, we're group D. Myself, Sashi, and Sudesh.
Sashi and Sudesh.
Yes.
Okay.
Thanks, Jeremy.
No worries. And Shehan, Sachini, Sachira, and Ashin.
Ashin.
Everyone is in that. Everyone on that group is there today. Okay.
All right, cool. So we can put them into breakouts, Jeremy?
Yeah.